You're applying for a mortgage. How does this affect your credit? That's the number one question I always get is, are you going to pull my credit? And people are so scared to have their credit pulled because they think there's a lot of misinformation out there. So there's a few different things when it comes to having your credit pulled. First of all, when we pull your credit, we're going to do what's called a soft pull. We're not doing a hard inquiry, so it doesn't ding your credit, but it gives me a picture to where I can see close to what your credit score is, and I can see what your debts are to help determine what we can do as far as pre-approval goes. Next is the hard inquiry. So again, a lot of people are scared. They think it's going to drop their credit score like 50 points. It doesn't. It's 1 to 3 points. It recovers after 30 days. And the CFPB has put out a rule that you can shop mortgages within 45 days and have your credit pulled multiple times within that time frame. And it only counts as one ding. The inquiries will show up on your report, but it only hits your score one time. Again, that's 1 to 3 points, and it does recover after 30 days. But it is important to have that done in the process so that you make sure that you are truly pre-approved. Sometimes the soft pull will be accurate, but if your credit score is a little bit low, that hard inquiry after the soft pull could come in even lower. So then it could cause an issue. So what you want to do as soon as we get started is you want to fill out the opt-out pre-screen. I'll send you the link if I haven't already. That will get you protected from getting solicitations, getting harassment calls. I've had clients that have literally received 30 calls in one day from other mortgage companies claiming to be us because they see that your credit was pulled, and the credit bureau unfortunately sells that information. So this opt-out will protect you from that. Then we will do a soft pull so that we can get a very good generic picture. And then once you go under contract, or if there's things that we need to look at prior to you going under contract, we will do that hard inquiry. Again, it's 1 to 3 points, and credit scores work in increments of 20 for mortgages. So if you have a 725 credit score and we pull your credit and it drops you to a 722, your interest rate is going to be the same with the 722 as it is with the 725. So we're here to make sure to protect your credit, protect your financial information. We're not going to do anything that's going to damage your score. So that's kind of how the credit pull process works.